I think most traders start to use canned indicators like a stochastic or RSI or MACD, and they use them with fixed length with not thinking much about them. They take the length that has been recommended by a broker perhaps, and they start trading them away, and they may have a good run for a while, and then they crash and burn for no explainable reason, and so they lose faith in their technology, and the basic problem is that they don't have a true understanding of the market activity and how to fit the indicators to that activity.
Welcome to Better System Trader, the podcast to help systematic traders of all levels improve their trading. We'll give you loads of expert tips and practical advice on system design and validation, money management, trading psychology, and many other topics. Whether you're just starting out or a savvy systematic trader, we're here to help you improve your trading and find more success. This is Better System Trader with your host, Andrew Swanscott.
Welcome to the Better System Trader podcast. Glad you could join me again. And today we're going to discuss a tip on adapting indicators to market activity. About a month ago now, John Ellis came on the show to discuss a brand new, more responsive indicator that he had developed, and he actually shared the indicator for free as well. We had an incredible response to that episode. Around 1,000 traders downloaded that indicator. And we even had traders convert it from Easy Language into other programming languages and share it. So I'd like to say a quick thanks to Yanni for converting it into AFL for Amy Broker. We also have a version for MT4 submitted by Tim, and Jack converted it into Thinkorswim format. So thanks to those guys for converting it, and that was a tremendous effort, and thanks for sharing it with the community as well. Now, if you haven't got a copy of that indicator yet, head on over to bettersystemtrader.com/103, where you can download a free copy and test it out for yourself. From my test, it shows a lot of potential in mean reversion strategy, so go check it out. Anyway, since there has been so much interest in indicators lately, I'm going to share a tip with you about making indicators adapt to market conditions, and this one is also from John Ellis. You heard at the start there that John was explaining the issue with using indicators at their default values or even at a fixed length, explaining how that approach doesn't actually take into account the underlying market activity. So how can we make our indicators more adaptive to market conditions? Well, let's take a listen to John now as he explains one method that he uses, and then after that he shares a simple technique that you can use to see if your indicators are in tune with the market or out of tune. So let's take a quick listen to John. All right, so how else can we use cycles to make robust trading strategies?
Well, one way is an open loop way is first measure the cycles, as I have shown with the autocorrelation periodogram, and then take that measured cycle period and apply it to another indicator. For example, if you're using an RSI, you might want to try using half the measured cycle period for the length of the calculation used in the RSI. Mm-hmm. That makes your RSI indicator dynamically tuned to measured conditions. It's still, that's an open loop situation, and you have some lag because you first measure the cycle, and that's based upon historical data. And then you apply that to an indicator which also has lag. So you must be aware that you must anticipate those turning points also, even though you're dynamically tuned to the measured cycle.
And what about if a trader doesn't know about cycles or how to measure them? What are some techniques that they can use to determine if their indicators are working properly or to improve the usefulness of their indicators?
Well, if you're using a stochastic, one characteristic of a stochastic is that if you're in an uptrend, the indicator will tend to be stuck near the upper limit for long periods of time. And that frankly is just an artifact of spectral dilation. That long cycle component that's in there in the trend component is driving that indicator to the to the upper limit and holding it. And conversely, if you're in a downtrend for a long period of time, the stochastic will get stuck against the lower limit. So the first technique is you must use a high-pass filter of some kind to get rid of spectral dilation. I recommend a 2-pole high-pass. I've written about that in my books, and people can find that. It just simply eliminates the longer trend components so that your stochastic will swing back and forth according to the short-term variations of the cycle of interest. And mostly for daily traders, that might be a monthly cycle. And the other case I mentioned, if you're using with an RSI, you can start with too long a period that's knowingly too long and just keep shortening it up until you get good sensitivity swings out of your indicator.
Okay, so that's interesting. So you can really tell just by looking at how the indicator behaves whether or not it's tuned to what the markets are doing.
As Yogi Bear said, you can see a lot just by looking.
So in there, John mentioned an indicator called the autocorrelation periodogram, which is a really technical sounding name, but it essentially works out the cycle lengths by comparing price data to itself. So it's a pretty simple concept. If you want to know more though, head on over to bettersystemtrader.com/58, where John explains that further and shares how you can get a copy of that indicator too. And also keep in mind that if you want to learn more about John Eller's techniques, John has a workshop coming up in a few months' time where he's going to teach you all the best cycles and DSP techniques in just 3 days. More information about that can be found on the show notes page at bettersystemtrader.com/107. So go check that out, and I'll catch you next week. Okay, well that's it for this episode. Thanks for listening. I hope you enjoyed the show. Come on over to bettersystemtrader.com. That's where you'll find all the previous episodes, all the transcribes, all the show notes, and all the free weekly trading tips. bettersystemtrader.com.